Hello and welcome to my YouTube channel Alexandru. On this channel you will find news and information about cryptocurrencies and business, also very good information about different methods of earning money. If you like this Alexandru YouTube channel, don't forget to subscribe, like and share this video. In the clip presented today we will talk about, what is Defy, decentralized finance. What you will find here in this video clip contents key characters. What exactly is Defy? Disadvantages of classical finance. Defy components. The four layers that make up Defy software are outlined below. The state of Defy today, conclusion and discussions. Decentralized finance, Defy, in its most basic form, is a system where financial items are made available on a public, decentralized blockchain network, making them accessible to anyone, eliminating the need to go through intermediaries such as banks or brokerages. Unlike a bank or brokerage account, Defy does not require a government-issued ID, social security number, or proof of address. Defy refers to a system where buyers, sellers, lenders, and borrowers connect peer-to-peer or with a strictly software-based intermediary, rather than a firm or organization making a transaction using software developed on blockchains. To achieve the goal of decentralization, a variety of technologies and protocols are used. A decentralized system, for example, could be made up of open-source technologies, blockchain and software. These financial products are made possible by smart contracts, which automate the terms of agreement between buyers and sellers or lenders and borrowers. Defy solutions are designed to remove middlemen between transacting parties, regardless of the technology or platform used. Despite the fact that the amount of token trading and money introduced through smart contracts into its ecosystem has been constantly increasing, Defy is still a young business with a developing infrastructure. Defy is not subject to regulation or control. Defy, on the other hand, is predicted to take over and replace modern banks in the future. Key characters. Decentralized finance, or Defy, aims to use technology to remove intermediaries between parties in a financial transaction. Defy components are stablecoins, use cases, and a software stack that enables application development. The infrastructure and use cases for Defy are still developing. What exactly is Defy? The introduction of technology into financial services is not new. Today, technology is used to complete most transactions at banks and other financial services organizations. However, the role of technology is limited to that of a facilitator in such transactions. Companies must still navigate the legalities of multiple jurisdictions, competing financial markets and differing standards to complete a transaction. Defy, with its multitude of standard software protocols and public blockchains to build upon, puts technology at the forefront of financial transactions. Defy is frequently associated with blockchain and cryptocurrencies. However, it has a much wider scope. It is vital to understand the existing state of the financial ecosystem in order to understand the thought processes that led to the development of decentralized finance. A hub-and-spoke approach is used to build a modern financial infrastructure. New York and London, for example, serve as operational hubs for the financial services industry, influencing economic activity in spokes, regional centers or financial centers such as Mumbai or Milan, which may not be as globally important as hubs. Cities, but still serve as important centers for their respective economies. Disadvantages of classical finance. From hubs to spokes and the rest of the global economy, economic prosperity or hardship radiates outward. In the operation of global financial services corporations, this paradigm of interdependence repeats itself. They have headquarters in hubs around the world, as well as local branches, partnerships and investments. Due to the size and scope of their operations, they are subject to a system of laws and regulations in each of their financial countries. Because of their size and scope, such institutions are critical to the stability of the global economy and are required to maintain or build new financial services infrastructures, although this model worked successfully in the previous century. The financial crisis and resulting Great Recession exposed its inadequacy. A domino effect of collapsing economies and the onset of the global recession resulted from the balance sheet difficulties of some significant banking institutions, Decentralized finance uses technology to disintermediate centralized models and allows anyone, regardless of ethnicity, age or cultural identity, to access financial services from anywhere. DeFi services and applications are generally based on public blockchains and either replicate existing products built on common technical standards or offer new services tailored to the DeFi ecosystem. DeFi apps, on the other hand, give consumers more control over their money through personal wallets and trading platforms that cater to individuals rather than institutions. DeFi components. The components of DeFi are similar to those of existing financial ecosystems in that they require stable currencies and a diverse range of use cases. Stable coins and services such as crypto exchanges and lending services are examples of DeFi components. Smart contracts provide the framework for DeFi applications to work, as they encode the conditions and behaviors required for these services to work. A smart contract code, for example, includes a custom code that specifies the exact terms and circumstances of an individual loan. The guarantee can be liquidated if specific conditions or circumstances are not met. This is all done by a code, rather than by a bank or other entity manually. The software contains all the components of a decentralized financial system. The components of each layer are designed to serve a specific purpose in building a DeFi system. Composability is a distinctive feature of the software, as components from each layer can be combined to create a DeFi application. The 4 layers that make up DeFi software are outlined below. Settlement layer. The settlement layer is also known as Layer 0 because it serves as the foundation for all other DeFi transactions. It consists of a public blockchain and a digital currency or cryptocurrency. This money, which may or may not be traded on public markets, is used to settle transactions on DeFi applications. Ethereum and its native token Ether, ETH, which is traded on crypto exchanges, is an example of the settlement layer. Tokenized forms of assets such as the US dollar or other tokens can be used in the settlement layer. A real estate token, for example, could represent ownership of land. Software protocols are established rules and regulations that govern specific tasks or operations. This would be a collection of principles and norms that all participants in a given industry have committed to follow as a condition of operating in the industry. Similar to real-world organizations. DeFi protocols are interoperable, meaning they can be used by many companies to create a service. Synthetix, an Ethereum-based derivatives trading platform, is an example of a DeFi protocol. The application layer, as its name suggests, is where consumer-facing programs are stored. The underlying protocols are abstracted into simple consumer-facing services in these applications. This layer hosts most of the applications of the Bitcoin ecosystem, such as decentralized cryptocurrency exchanges and lending services. Aggregation layer. Aggregators connect numerous applications in the previous layer to provide a service to investors in the aggregation layer. They could, for example, make it possible to move money seamlessly between different financial products to maximize returns. Such trading actions would require a lot of documentation and coordination in a physical arrangement. The state of DeFi today. The evolution of decentralized finance is still in its early stages. As of March 2021, the total value of DeFi contracts was over $41 billion. By multiplying the amount of tokens in the protocol by their value in USD, the total blocked amount is calculated. Although the total amount for DeFi may seem high, it is crucial to realize that it is only a theoretical figure, as many DeFi coins do not have adequate liquidity and volume to be traded on cryptocurrency exchanges. The open and dispersed nature of the decentralized financial ecosystem can cause problems with current financial regulations, however. Current laws are based on the concept of distinct financial jurisdictions, each with its own set of laws and regulations. The borderless transaction of DeFi raises key regulatory issues for this type of legislation. Who is responsible for a financial crime that occurs across borders, protocols and DeFi applications? For example, another area of concern for DeFi regulation is smart contracts. Apart from the success of Bitcoin, DeFi is the best example of the code is law idea, according to which law is a set of rules created and enforced by immutable code. The smart contract algorithm is pre-programmed with the essential constructs and terms of service for two-party transactions. Software systems, on the other hand, could fail for any number of reasons. What if a system crashes due to bad input? Or if a compiler, which takes care of compiling and running the code, makes a mistake? Who is responsible for these changes? These and a number of other issues need to be resolved before Defy becomes a widely adopted technology. Conclusion and discussions. In conclusion, after reading this article, you should be left with the idea that decentralized finance or Defy aims to use technology to eliminate intermediaries between parties in a financial transaction. Also, Defy components are stable coins, use cases, and a software stack that enables application development. The infrastructure and use cases for Defy are still developing. If you got this far, thank you for watching this video clip available on the YouTube channel at Alexandru. If you want your friends to know about this video clip, share it on social networks. Don't forget to subscribe to the channel and leave a like to this video clip.